The UK housing market is ever-changing, constantly evolving with the times. Prices go up and down, influenced by many factors such as economic conditions, government policies, and market demand. Understanding these factors is key for both buyers and sellers as it helps them make informed decisions. This report will look at the forecast for UK house prices from 2024 to 2028, providing a comprehensive analysis. We'll delve into the forces shaping the market. These include interest rates, the overall economy and employment levels, all of which play a crucial role. By examining past trends and current data, we can make informed predictions about the future, helping stakeholders plan ahead. Our journey will take us across different regions of the UK, each with its own unique market dynamics. We'll explore anticipated growth in areas like London, the Midlands and the North, identifying key opportunities and challenges. Each region has its own unique characteristics that influence its housing market, from architectural styles to local economic conditions. Whether you're a seasoned homeowner or a first-time buyer, this report aims to provide valuable insights and guidance. Let's navigate the UK housing market together, understanding its complexities and seizing its opportunities. Several key factors influence house prices in the UK. Understanding these drivers is essential for making sense of market trends. One significant factor is the state of the economy. Economic growth usually leads to higher employment and wages. This, in turn, increases demand for housing, pushing prices upwards. Conversely, economic downturns can have the opposite effect. Interest rates set by the Bank of England play a crucial role. Lower interest rates make mortgages cheaper, making home ownership more attractive. This can lead to increased demand and rising house prices. Supply and demand also play a fundamental role. A shortage of housing supply, particularly in desirable areas, can drive up prices. Conversely, an oversupply can lead to stagnation or even price drops. Interest rates are a powerful tool used by the Bank of England to control inflation. When inflation is high, the bank may raise interest rates to curb spending and borrowing. Higher interest rates make mortgages more expensive, potentially dampening demand for housing. This can lead to slower house price growth or even price declines. On the other hand, the bank may lower interest rates to stimulate the economy during periods of low inflation or recession. Lower rates make borrowing cheaper, encouraging spending and investment. This can boost demand for housing, leading to price increases. The Bank of England aims to strike a balance, keeping inflation in check while supporting economic growth. The overall health of the UK economy is a major driver of house prices. A strong economy, characterised by job creation and wage growth, typically fuels demand for housing. When people feel financially secure, they are more likely to invest in property. This increased demand, coupled with limited supply, can lead to significant house price appreciation. Conversely, economic downturns can have a negative impact on the housing market. Job losses, wage stagnation, and reduced consumer confidence can dampen demand for housing. This can lead to falling house prices and a slowdown in market activity. The relationship between the economy and house prices is complex and multifaceted. Section 5, looking back to predict the future. To understand where the UK housing market might be headed, it's helpful to look at past trends. By examining historical data, we can identify patterns and cycles that often repeat themselves over time. Over the past few decades, the UK has experienced significant house price growth. This growth has been influenced by various factors, including economic policies, interest rates, and demographic changes. However, this growth has not been uniform across all regions. Different areas have seen varying levels of price increases, reflecting local economic conditions and housing demand. Factors such as location, economic conditions, and housing supply have created regional variations. For instance, areas with strong job markets and good transport links tend to see higher demand and, consequently, higher prices. For example, London and the South East have historically seen higher house price growth than other parts of the UK. These regions benefit from a concentration of economic activities and better infrastructure. This is due in part to strong demand, a thriving economy, and limited housing supply. The scarcity of available properties in these areas drives prices up, making them some of the most expensive places to live in the UK. Understanding these past trends can provide valuable insights into future market behavior. By studying how different factors have influenced the market in the past, we can better anticipate how they might impact future trends. While past performance is not a guarantee of future results, it can help us make more informed predictions. By learning from history, we can develop strategies to navigate the complexities of the housing market more effectively. Section 6, Regional Roundup, London and the South East. This region is not just the economic powerhouse of the UK, but also a cultural and historical hub, attracting millions of visitors and new residents each year. London and the South East have long been hotspots in the UK housing market. The allure of vibrant city life, coupled with picturesque suburban areas, makes this region highly sought after. High demand, driven by a strong economy and a desirable location, has consistently pushed up prices. The bustling streets of London filled with opportunities, and the serene suburbs offer a unique blend that appeals to many. However, in recent years, growth in these regions has started to slow. The once rapid price increases have begun to taper off, reflecting a shift in the market dynamics. This is partly due to affordability constraints, as prices have outpaced wage growth for some time. Many families find it increasingly difficult to keep up with the rising costs, leading to a more cautious approach in the market. Looking ahead to 2024 to 2028, we expect to see continued but more moderate growth in London and the South East. The market is likely to stabilize, offering more sustainable growth rates. Factors such as interest rates, economic conditions, and government policies will play a role in shaping the market. The decisions made by the Bank of England and government initiatives will be crucial in determining the future landscape. Areas outside of central London with good transport links and amenities are likely to experience stronger demand. These suburban regions offer a balance of accessibility and quality of life, making them attractive to both families and professionals. Section 7, Regional Roundup, the Midlands and North. The Midlands and the north of England have seen significant growth in recent years. This is partly due to increased affordability compared to London and the South East. Government initiatives aimed at boosting economic growth in these regions have also played a role. We expect this trend to continue in the coming years, with the Midlands and the North likely to outperform London and the South East in terms of house price growth. Factors such as improving infrastructure, job creation, and a growing economy are attracting both residents and investors. Cities like Manchester, Birmingham, and Leeds are emerging as key property hotspots. Section 8, Navigating the Housing Market, Tips for Buyers and Sellers. Navigating the UK housing market can be challenging, whether you're a first-time buyer or a seasoned homeowner. Here are some tips to help you make informed decisions. For buyers, it's crucial to research the market thoroughly. Understand your budget, get pre-approved for a mortgage, and factor in additional costs such as stamp duty and legal fees. Be prepared to act quickly when you find a property you like, as competition can be fierce. For sellers, it's important to price your property realistically based on market conditions. Consider using a reputable estate agent and ensure your property is well presented to attract potential buyers. Be prepared to negotiate and be flexible with your timeline. Section 9, Conclusion, UK house prices on the horizon. The UK housing market is constantly evolving, influenced by a complex interplay of factors. While predicting the future with certainty is impossible, analysing current trends and historical data can provide valuable insights. We expect to see continued but more moderate house price growth in the coming years. Regional variations will persist, with the Midlands and the North likely to outperform London and the South East. Factors such as interest rates, the economy, and government policies will continue to shape the market. Both buyers and sellers need to stay informed and adapt to changing conditions. By understanding the forces at play and seeking expert advice, you can navigate the UK housing market with confidence.